Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, June the 26th. The year's 2019. Let's talk trading. How many indicators do you need? Yesterday, I talked about my favorite indicator, horizontal line. But as usual, my inbox was filled up with more things from other traders or trading companies, entities that are trying to separate me from my dollars. They want to sell me indicators. It's just so funny to me. And it's like sometimes people think if they just have that one more indicator that, it's going to make all the difference in the world. But it really isn't going to make all the difference in the world. It's really not. There's one thing that makes the difference in the trading world, and that is your risk and money management. You see, if you have your risk management in place, that's going to protect you on the downside. You're only going to lose a certain amount per trade, and that way you'll have the confidence to employ your system, your method, your execution and performance. On the upside, your money management, you'll know when to move that stop up to break even +1. I read something today. It's a pretty interesting thought. It's that patience doesn't mean you just sit there and do nothing. You see, we talk about patience in trading and about waiting, but you see, while you wait, you have to be actively engaged in what's going on in the market. If that's how you get your best performance. But when it comes to indicators, once again, it's not the more the merrier, that's for sure. And once again, the money and risk management. How much are you willing to lose per trade? That's if you focus on that, you're about 80% there. Now, how many indicators do you need? I say horizontal line. How many horizontal lines? Well, that's really up to the trader. I mean, I like to see the previous day's high and low. I like to see the current day's open. Those are usually the main ones. And then, of course, next to horizontal lines, I use dots. But if we're just going to talk about horizontal lines, then I also like to see the previous day's midpoint, or in the case where I have the indicator set, where whatever the chart period I'm looking at, I see the previous, in this case, I see the previous week's high. Now, yesterday, the euro yen was down here. And then it's moved up. Now, I say yesterday only because when I open the chart, sometimes if I open it late, it actually is yesterday. So in the case here, but this isn't yesterday, this is the weekly, but yesterday it was down here and now it's up here. So you see it went right across those two horizontal lines, which were the upper wick zone of the previous week, and we're 45 pips above that high, you see, making new highs right there. So point being is just using these simple horizontal lines and taking the trade in the direction price crosses can prove to be profitable. And you see, once again, we had pivot point. Actually, no, we had the pivot point away from the buy zone here. So we definitely had a long bias. And you see here, we had, during this hour, we got triggered. We took out the pivot. And you see it almost came back to the buy zone. So chances are, depending on if you had your stop loss moved up and you might have taken some profit here when it crossed below the weekly open. And so you see this horizontal line right here. Once again, going through the weekly buy zone, you see what happened. I've mentioned that before. The weekly buy zone can be a very, very profitable trade if you have the patience to sit there and let price move, because you know it has to range. And the weekly range is usually greater than the daily range on average and via the statistics, the frequency distribution. And you can see here what I was talking about. Yesterday's close was here. And what did price do? It went into the lower wick zone of the previous day, taking that exit, and you can see right now we're about 78 pips above that wick zone. And we only have 4 pairs over 100, but 2 of them are over 200. You can see here a big loss in the pound New Zealand dollar, and and also movement here in the euro New Zealand dollar, and the New Zealand yen went to the upside. And I talk about horizontal lines, probably some of you might say ad nauseum, but to me it's just so simple. You take price, the direction they cross, they don't move when you change. The lines don't move when you switch time frames. So here, this is just the Einstein lines saying this is where I open this trading portfolio or profile here on MT4. So just a few minutes ago, because I have a different profile what I use in my trading. It's not the same one I use to make videos, obviously. And this is what price has done. It gave maybe a little 3-pip trade here. And you can see right here, once again, it dipped within that zone. And I was got something in the mail. They were talking about pullbacks and head and shoulders and things of that nature, all these different chart patterns. But you see, nobody ever runs frequency distributions on them. So how do I know? You know, they talk about back testing, but I think back testing is only good to make sure your indicator, your EA, is actually working the way you want it to work. Not is it producing results, but is it triggering trades when it's supposed to and exiting trades when it's supposed to. And I spoke once again about frequency distribution of the range here. And so you can see here we have a current range of 82, average 68. And you can see where that average falls in the frequency distribution. Now, we can switch this over and look at the weekly. And you can see here on the weekly, there's only one under 100. So I'd have to change the ranges here. So range 93 pips is 43% of average. Average range 215. Maximum 791, minimum 94. So you can see here, chances are for the week, it's going to move even further. So, but these type of indicators are for analysis. In my opinion, that's what I use them for. That's why I wrote them. So I can analyze the movement of price. And once again, horizontal lines. But what I was saying, how many indicators are enough? So you probably see most of my charts have a lot of the same indicators. For example, the little time indicator here. So when I post charts, people can see when I was looking at it. And then you can see the buttons indicator, that this has only been around a few years now, where you can switch the chart here, the pair you're looking at, and you can switch the time frame. And then the candle color multimeter, the original one just had bars, red and green, and then I made an upgrade to it where I count the number of green bars in a row and the number of red bars in a row. And then I also put buttons here in case you didn't use this indicator. And then I also have this little indicator. I modified the B clock. And then the magnified market price indicator, which I modified, that gives you what I call the GPS. Where is price in comparison to the daily open, the current daily high, and the current daily low? And there's some other things. It'll do percentages. It'll do Fibonacci calculations, but I don't use them much anymore. But you can show the fib retrace, you can show the discount, you can show percentage change, all there, depending on how you like to analyze price. So, and then I've got a price action trade indicator telling you which way to buy. I think that's one of the training wheels indicators that I've written. You've got the price action trading wheels, and you've got the idiot mode skull telling you what not to do, because, well, some of you know that story. I don't need to get into it again. But you could start with a blank chart and build your own. Build it the way you want. So this is just a blank chart, just with the what comes from MT4, tells you the pair, the chart period. But you can switch to daily, and people say, how can you trade off a daily chart? Well, to me it's simple. Depending on what time you start trading and where price is in relation to the previous day levels. So for example here, if price happened to be below this line and was moving up, then you could have easily taken this long here, you'd be up. Or if price was within here and it dropped down, you could have gone short. Like in this example here, you see price exited above. Just wick zone trades using your eyes. You don't even have to have the horizontal lines. Or you can see things like a turn trade happening. So here you can see we were at a bottom here. You see at a bottom, price made a new low compared to these last three, or a whole bunch, but you see it didn't quite make a lower low here, but it was in this wick zone right here, and then it went through these, and so it's like starts to go bullish. Enter that trade. Nice move there. So it's, how many indicators you have on your chart, that's really up to you. As you notice, I eliminated the squigglies. Maybe sometime, if anybody wants, I think I've done that. I usually do that about once a year. I go over some squiggly line indicators and how to trade, but they don't to me, they don't add anything. I can just look at the chart and see, based on, thousands of hours of chart reading, but it's not too hard. If you scrunch the chart, you can see this was definitely, that first day of the year was crazy, but you can see here what's going on with price. And, right here, you can see this is buying at a discount here, right? So, fellow traders, as always, it's not what you trade, it's how you trade it. So go out there and drain the banks using whatever indicators you want.